All right, guys. Yeah. So this should be the last video of backtest for this week. I think I've dropped you guys 7 backtest videos. I've backtested 7 different pairs using this strategy that I use. And overall, we've seen that this pair continuously works. So if you are taking any of these pairs or all of these pairs last week, you would have actually cashed out big time last week. Okay. So, but yeah, this is the last backtest video for now. I may get to do more backtest videos as times goes on, as the week goes on, right? I may get to do more, but for now, this is it. All right, sit back, relax, and enjoy. This is Josh FX Pro. Let's get into it. So on this pair, this is VIX of Volatility 75 1S index. All right. So this was last week. This was what we had last week. So we had our zone here, our resistance zone here, which later turned a support. So this was what we had, market breaking off a resistance point, right? Then coming back down here for an entry place or an area of interest to take it as a buy. So let's see what we would have seen already. So this would have been overall, this would have been our range. This would have been our range. First of all, the zone, we've seen it. Next thing, the trading range or the trend, right? Trading range tells you a trend, gives you like a trend scope of what to look out for. So it's a bullish trend. We had the break off. It was bearish all the way here. So later it came out and became bullish after it broke off this high here. This candle broke off this high here. So we're just going to draw out our high that it broke out. Let me just keep it here for now. Yep. Then later I could draw it down. Okay, I think that's perfect. So maybe if I want to name it, oh, it's even in the right spot. So this was where we had our change of character. So this week coming back down. So last week, Sunday, came back to tap in on an area. I don't know what area. So, but if we are to take this trade, this, if you notice, this is where we had our order block. This is where the other block would have been. We want to see why market didn't get to our order block. It got to somewhere else, but it didn't get to the other block. Yeah, right. So, so this other block is still unmitigated. So market could still come back later and tapping on the other block, come back here later and tapping on the other block, right? So market could still do this, come back, tapping on it. So, but for now, that's where we are. So I'll name this D1 because it's a daily time frame order block, right? So we don't have, I don't see, aside here, I don't see any other fair value gap, of which this fair value gap was invalidated by this Sunday candle. So we're looking at what we would have seen at this point. Let's break it down to 4 hours. If we were to take this trade, what would we have seen? All right. So at this point now, we had market give us a high. So at this point, ordinarily we have this other block here, which is same thing as this other block here, right? Which is let's just call it the same thing as that other block. So I would have either picked this other block. Well, I think this is more better because we had from here we had like a down and like a swing low and a push high, right? From here we had that kind of like a swing on candles. So if I'm to pick another block, I would comfortably pick this one to see what market does there. Remember, the other block doesn't really matter whether it's going to mitigate or not going to mitigate. If you whether it's valid or not valid, what you need to see is confirmations that the other block is valid by the way the market acts around that other block. Do you get? By the way the market acts around that other block. So it's what gives you a confirmation that market is going to be bullish or bearish. from that order block point. All right, so I'm just going to tap this in 4 hours. I'm going to name it a 4 hours order block. So if you stretch it out to this point, now you see what we saw, right? And if you notice how, let me click this. So if you notice how markets came below our change of character point, so this could be like a, should we call it a 50%? Because if you drag this to this, it may be like a 50% retracement, right? So you notice how market came below that change of character point, tapped in on our 4 hours order block. It came straight. There was no trending there. So one of the rules is once there's no trend to that point, all you do is trade on your first candlestick pattern that is fully formed, reversal candlestick pattern that is fully formed. So this would have been what the entry would have looked like. Although we started here, but the entry would have been like since on Sunday. But if you had cut this here, market doing this, and after it tapped in here and closed here like a hammer, if you notice, this was like a hammer close. See, it's like a hammer close here. So if you had cut in this after the hammer close, it tapped in. Let me shift this. Yeah, you see? So this is like the first leg, this is like the second leg. So if you had seen this close here, this is actually the main point that we're trading is between this morning star that showed here. So your stop is still going to be below the morning star formation, the structure of the morning star. It's still going to be below that structure of the morning star, right? Then you take your entry. The reason why you may ask, why do I enter on 4 hours? Most times that's where I see my confirmation and that's where I enter it. You get, if I'm to break this down on a 1 hour now, you may see confirmations on 1 hour. You may still not see confirmations on 1 hour. Do you get? So, but this trade, yes, this trade was one of the trade I took last week as well. If you follow my channel, if you follow one, just check for the previous videos I've posted before now, which is big 75 trade follow up. I took this trade to this point. I didn't wait until all this area to take 1:10. No, if I was trailing the trade, then fine, I would have. But this was like the point where I took the trade. It was a 1:6 kind of trade, right? So this was the trade, the point you would have entered this market from. So, but if you break it down to a 1 hour, this is what we have on a 1 hour now. Let's see. Okay, so on the 1 hour, we see that no matter how little it looks like, but it is still something. So on the 1 hour, we see that what's going on here? Yeah, okay. So on the 1 hour, see the market trended there. You see this low and a high is what instigated the trend. Market trended here. So what you need to see is a change of character or a break of structure to the upside before you take it. On the 1 hour now, within, this was not the week. Okay, this was where Monday started from. Yeah, this was where Monday started from. So on the 1 hour now, within this point where Monday started from, right, you would have waited for this break here. This break. I don't know if you would have seen another block here. This other block was invalidated. Yeah, maybe this other block here. Yes, maybe this other block. This particular red candle here before the entire push. Yeah, so you would have waited for this break of this particular high. And waited for the break of this particular high on the 1 hour. Yes. So once this high is broken, right? Once this high is broken, then we now look for market coming back to an interest point. An interest point would be this fair value gap. There's a fair value gap here. There's a small fair value gap here on the 1 hour. Let me mark it out. Between this point and this point, yes. Let me change the color so you see what I'm talking about. Yes. So this is a 1 hour fair value gap, which is between here. Yes. So between this point and this point, there's a fair value gap. So you see how market came straight and gave you this engulfing, or rather a morning star, however you say it, but it's more like an engulfing. So this would have been a more better entry and a more entry that would have given you more money actually on a 1 hour. If you were to enter on a 1 hour, I would have entered here. My stop would have been below the structure, which is here. Yeah. Then, yeah, that would have been my stop. Then I'll take it all the way to this point. All the way to this point was 1:5. But this initial entry all the way to this point was like 1:6. But well, if you had followed it, you would have still made profit regardless of wherever the market closed. So overall, this is 1:9, and this is 1:10. So one is 1:10, and the other is 1:9. 1:10, 1:9. So 1:10, 1:9. So you would have had, if you are taking the two trade, you would have had like 1:to almost 20 or 2:20, depending on how you took the trade. All right. On a 1 hour, you would have been trailing your stop. When you see market push all the way here, you wait for this kind of reversal, then you put your stop below here. Then wait for market to push again, give you this kind of reversal, put your stop below here, wait for market to push. After market pushed off this high, then that's when you put your stop below here. They get to put your stop below here. And market overall gave you 1:10, 1:9, depending on how you're taking it. So this is the trade that we would have taken last week. I took this trade last week actually. So this is the trade I took last week. And if you saw this trade, if you follow my channel, I do analysis, and I post my analysis, my view for the week. And if you followed up, I also post the update on the view. So this could also play like an update to that particular market we're looking at or we entered during the week. And if you notice, it was like on a Monday that we had this entry. The entry was like on a Monday. Yeah, it was like, yeah, it was like on a Monday. Yeah. So this is the trade. Please drop a comment. Let me know what you think overall, and expect more analysis video of expect my analysis video for this week, this coming week, and let's make money together. All right. See you guys in the next video. Bye bye for now. Ciao.